right, welcome to the Aramir Trader Tuesday. A special guest, Amy Meissner. Amy and I have known each other for, oh gosh, what it is, Amy, 10, 15 years, something like that.
Wow, yeah,
Um, we
15 years, I think.
we met in the sharing community years and years ago, and we've been working together with Capital Discussions, now Aramir. Amy's brought lots of classes and trade alerts and workshops and stuff to lots of people. Everybody's always likes to hear what Amy's up to. So Amy has a really interesting journey. She was I guess part of your job was IT, right? So,
Actually, I
um,
was in uh, software development. I was kind of on the, more of the analyzing side. Like I would analyze what people needed,
like quality assurance kind of stuff or requirements.
more requirements. And then I would work with the programming teams to make sure that all of those features were built in. Because remember, back in the 80s when I started, um, we didn't even have, desktop computers. We had like mainframe computers and mini computers um, and everybody had those, the monitors on their desks that were attached to it, the dummy monitors. And the software wasn't really built out. I mean, a lot of the software just kind of had to be built from scratch, depending on what the business needs were. And
Right.
so that's kind of how I started out with software development. And then eventually, people started building packages, but a lot of the stuff was, specific companies that specifically built certain types of things. Like one of the companies I worked with, their uh, all of their software was had to do with call centers. And one of their biggest clients was actually IBM, and they did all the software for their call centers, to be able to handle incoming calls and, making sure customers' requests were filled and things like that. And so everything was specialized software. So it was a matter of being sent to various clients, gathering what their requirements were, what they were looking for, and then kind of trying to translate that to the programming teams and then following up and kind of going through that whole life cycle. So it was interesting. I even had to learn how to program a little bit, believe it or not, but most of those skills have completely left me. Um, but it was interesting. And then after that, I started getting involved in multimedia development because this is before the internet. So in the 90s, there was a lot of people were building like marketing and either was marketing or just kind of lifestyle CDs where people would learn how to do something like learn how to play chess, or if it was a business, they were doing some fun CD that they could kind of market their products on, and they would hand them out to prospective clients and things like that. So I did a lot of those types of um, I actually did programming in a special program called Macromedia Director, which I think ended up being bought out by Adobe.
Yeah,
And
Adobe bought Macromedia. Yep.
yeah, and it was a specialized language. It wasn't really like the kind of programming languages that you see today or anything. It was just kind of specialized, and you actually had to build things frame by frame because everything was, um, kind of like a kind of like the halfway between like a little mini movie and like an interactive CD-ROM. So, if you click on this, something happens, and sometimes it would be,
Oh,
movie, it could
sure.
be graphics, it could be animations and things like that. So I did a lot of stuff like that. And then I ended up creating my own little company, and I built with some friends of mine, we actually got together and we created four different CD-ROM titles that were kind of like in the lifestyle um, genre. So like you'd go to like CompUSA or Fry's when they used to have CompUSA and Fry's, and they'd have those like long like shelves and shelves and shelves of all these different CD-ROMs of lifestyle things, like how to whatever, how to knit, or how to learning about wine, or all that kind of stuff. So I got together with some friends, and we actually developed four different titles that were distributed by the Learning Company, and they were in like Fry's and CompUSA and all these different stores. And it was so much fun. It was like making, it was kind of like producing like little mini, these little productions of these fun projects. And we picked some pretty fun um, subjects to talk about. So we did like, you know, different types of cocktails. We did one on cigars because that was a big thing back then. We did one on coffee and chocolate, and that was a lot of fun. So completely different from trading. I kind of got into trading by accident, actually. So,
So how
um,
did you get into trading?
so I was married at the time, and actually I was out to dinner with some friends of mine, and I had kind of dabbled in options for a little bit in the mid 90s. I didn't really know what I was doing back then at all. And it was
Who
really
does
difficult.
when you're starting, right?
Right. I didn't know anything about, I mean, I think I think I heard something about it because my brother was a commodities broker. So I was kind of interested in what he was doing. And I thought, well, this sounds interesting. Instead of just buying and selling stocks, maybe I'll try options or whatever. This sounds really interesting. And back then you had to get a firm in Chicago. There was only like few firms in Chicago that would let you like a person, like a layperson like me, trade options. And you had to open up an account there. I want to say it was, I'm trying to remember the name of I don't know if it'll come to me, but anyway, I had to open up an account in Chicago, and you had to call in your orders. And I remember having this little radio, um, this little thing, this little ticker machine that worked off of radio waves, so I could see like the tickers go by, because you weren't getting anything like on cell phones or anything like that back then. And I wasn't really very good at it. I think I sold mainly like spreads in the OEX and the SPX. And at first it was like, this is great. I was making money like, every month selling spreads and condors and things like that. And then as you know, and a lot of us learned pretty early on, you can make money really easy for a long time. And then you could have one trade that kind of wipes out all of your gains. And that's kind of what happened back in the 90s. So I just kind of hung up my trading, hat and said, nope, I'm not going to do this. This isn't for me. And just left it alone for a while until about 10 years later, I was at dinner with some friends of mine and my husband at the time. And my friend had remembered me doing that. He had remembered that time when I was trading. And he also remembered the time that I lost all of my winnings because we were all on a ski trip together. And he related that story. For some reason, it came up and he relayed that story. And for some reason, my husband, he was saying, I don't know why that didn't deter him. He wanted me to take some of our savings and invest it. And he thought options would be a great thing to do. And for some reason, that story didn't deter him at all. He kind of pushed me into it. So if it really wasn't for him, I probably wouldn't have done anything. But I think the funny thing was, I guess it was meant to be, because I think like the week later, or maybe a few days later, I got a postcard in the mail from Option View, and it was Dan Sheridan's new Sheridan Mentoring. And I thought, well, that must be a sign or something. So I guess, I'll learn. I don't want to do it myself because I don't know what I'm doing. I'll sign up and learn. And that kind of, the rest is history. I met you and Dan Harvey and a lot of other people there, and learned all the different types of strategies, and learned how to trade them. And I think the most important thing was learning risk management, learning about risk management. It wasn't really about, and that's the one thing that I really took away from my experience, especially, even today, and that I try to relay to my students, is the most important thing. It's not about trying to make money. I mean, it is, you want to make money, right? But the most important thing that you really want to learn is about risk management. If you can figure out the risk management part, you will make money, assuming you're picking strategies that have potential to make money. But that's the most important thing I learned there. And then I think Dan Harvey was one of my, even though it was Sheridan Mentoring, I learned a lot from Dan Harvey as far as the different types of strategies that I eventually started to develop on my own and kind of create to suit my trading style and my lifestyle. And yeah, and then started teaching, and yeah, so that was back in 2005, I think. So yeah, almost, yeah,
Yeah,
so yeah,
almost 20 years.
almost 20 years since then. So yeah, so we've known each other for a long time. Yeah.
I
So
think I was a student at Shared Mentoring in '06 and then started working for Dan in summer of '07.
Hmm.
But yeah, we've known each other a long time. Now I know John Sarkett wrote that article about you, the Queen of the Iron Condor, in Stocks and Commodities magazine. I guess you were doing a lot of condors back at the time when he did that.
Yeah, I think when I started learning all of the different strategies, I think at Sheridan Mentoring, I remember we were learning all these different things. We were learning butterflies and condors and double diagonals and calendars and I think it was a little bit of everything. And I kind of found that the things that I liked at the time that suited for me and my understanding were double diagonals and iron condors. And double diagonals worked for me for a while. I think I did mostly in stocks. I remember trading Goldman Sachs a lot. Um, and then they stopped working for me, and I really started gravitating more towards iron condors. And I worked with Dan Harvey on a couple of ways that he was trading the iron condors and being like more proactive with my with his adjustment style. And I kind of learned that from him. And then I kind of developed a pretty good track record. And that's when I think in 2012 I I think I was doing a class at Sheridan Mentoring at the time. I think I did teach a class there on iron condors for a little bit. And I think that's how he found me. I'm not sure. But anyway, he asked if he could do an article and he did a really nice article and it was on one of the iron condor strategies that still is traded today by a lot of my students and still works really well.
I remember he had the nested iron condor for a long time. People
That
were
was it.
happy with that. That was
Yeah,
the nested?
that was the
Okay.
strategy. Yeah, it still works today. It still works great. It's just, it's just a more proactive way of trading it because as everyone knows, as you learn, iron condors have a really, or wide iron condors, high probability, I should say, iron condors have a really horrible risk reward ratio. You can make most of the time you're going to make money, but it's a very small amount compared to how much you're risking.
And
And
risk 100 to lose 900.
and
Yeah.
even though, like, on a lot of the broken wing butterflies, we might have something kind of similar because we're taking profits early, but the dynamics and the way the setup can handle moves is a lot differently. Like in a butterfly, there it's a lot, even if you have a big move, you're not really down a lot. With an iron condor, you have, a big enough move in a small amount of time, or even not even that big of a move, and you can really start hurting your profit and loss. You can really drag the um, your profit, go from a profit to a loss, or have like a drawdown pretty quickly. And so what that strategy kind of was about was, you know, being very proactive so that you didn't get into a situation where you had an iron condor and you were showing um, a too big of a loss that you really couldn't adjust your way out of. So it was much more proactive. But yeah, so I think it's still traded today. And um, I think I want to say I talked about it not too long ago, um, but I can't remember which must have been one of our old roundtables or something like that that I talked about it recently. So, but anyway, yeah. So that was what that article was about actually as well. So it's
And
fun.
so how would you characterize like the nested versus the asymmetric iron condor, the differences?
Well, the nested iron condor it's also monthly, or I created it as a monthly strategy, a monthly campaign. Remember, a lot of these things that I created back in the day were, when we only had monthly cycles. We didn't have all these weekly cycles. And when we started having them, even then, there wasn't enough liquidity. Now you can do, whatever. But back then, everything was based on monthly cycles, and um, it was, in order to bring in enough credit, I was going out, I think about 70 to 80 days to expiration on that site on that. But most of the time I was out without having to overlap trade. So it was kind of a monthly campaign. So both the AIC and the nested were both monthly campaigns. Um, the differences I would say would be um, because the market tends to move up more than it moves down, and when it moves up, it can really like kind of rally hard. The upside adjustments just start to get annoying after a while. And so the AIC was kind of created not because the nested wasn't doing well, but I wanted to have something that I didn't want to have to change my margin. So that was one plus. Whereas with the nested, the margin can change. It
Yeah,
doesn't have
it
to, but
can
it really
really
can.
grow. Yeah.
It could grow, yeah, it can grow a little bit. So basically with the nested, I would go in and I would say, you know what, there's a possibility that I could triple my margin, up to a maximum of triple my margin. So I always had to go in with that in mind. And the AIC was created for, once you go in with a certain margin, that was it. You didn't have to change it. So it was much more margin efficient. It was also, I think at the time when that was created, the market had been like really rallying a lot. So just kind of getting sick of, adjusting to the upside. So the AIC was created so that it was much less risk to the upside. And I didn't want to lose sight of a possible market correction or crash. So obviously we built in those hedges. So it's just different. So it's still a monthly campaign, but the margin is much more efficient. You don't have to raise your margin. You don't have as much, or you can have little to no upside risk if, for rallying markets. And it was the biggest thing, I guess, was it has a much flatter T plus zero line, much less gamma. So when the market's moving around, even though I'm being very proactive on my nested iron condor, when the market's moving around, you can have a pretty big move in the AIC and your position isn't being hurt very much. So those are the kind of differences, because any iron condor, even the nested, as the market moves, it's kind of like you have a little pebble on a hill, right? And as the market moves, depending on when it happens, like the sooner in the trade, the harder it's going to be. But you can really kind of, go from, profit to a loss pretty quickly without that big of a move early on. And it takes longer and longer as the trade progresses before that flattens out a little bit or starts to take on the expiration line structure a little bit more. Whereas with the asymmetrical, it's built with the built-in hedges so that you have a much flatter T plus. It almost is more similar to like a butterfly or a broken wing butterfly. T plus zero line, which is much more flat for a longer period of time than an iron condor. So I guess that would probably be another big difference. So those three things, I think: upside, margin, and much flatter T plus zero line.
Now, at some point, you started getting interested in butterflies. So how did that evolve?
Well, I I'm always playing around with different strategies. I'm always looking for something that's going to give me the best bang for the buck. And I always liked the butterflies and the broken wing butterflies, but I didn't really like the longer term ones. I liked the fact that they were very flat and you could get involved in something and um, like John Locke, and all of his stuff, which is great. You can get involved with something that's like, 50, 60, 70 days out to expiration. You have this nice super flat T plus zero line. But I never really liked the adjustment style of those strategies. It was always like, you're up a little tiny bit, or you're just sitting there floating around, nothing's happening. You don't really have a lot of theta back, in those cases for a while. Finally, you start getting some money coming in, and then something happens in the market, and you have to make an adjustment where you're literally moving the whole position, or you're adding to the position, which is also adding to your margin. And I preferred, well, I have that AIC, the asymmetric iron condor. I don't have to do that. I don't have to change my margin. And it also has a flat T plus zero, and it's also a longer term monthly strategy. So I kind of felt like for me, that was a better strategy. But when the weekly cycles started to become more prevalent and had a lot more liquidity and you could trade them, um, that's when I really started looking more into the butterflies again, because you really can't get enough premium um, to make it worth your while in an unbalanced or a condor situation as you get closer. I mean, you can, but not the way I wanted to trade. I wanted to try to find something that I would be able to feel comfortable in if the market moved, be able to take a small amount of profit and be able to do it on a weekly basis so that I could grow my account a lot faster. And so that's kind of when I really started looking into butterflies and broken wing butterflies and came up with the A14, was when I just decided, okay, what are my goals? So I kind of looked at it as, what's my goal? I want to do something. I want to build my account quicker. I want to take advantage of these weekly trades. How close to expiration can I get and still feel safe in a strategy that has not too many moving parts and, kind of a simple, because, I like to, I don't want to sit in front of my computer a lot. So I'm always looking for something that I can, if I adjust something, I want to, yay, I'm making money now. Uh, um, you heard that in the background. I want to be able to, adjust it. So, in a very simple way, right? So that I'm not doing much. So that's kind of how the A14 came about, because I was looking at what structure is going to give me the best bang for my buck for what I'm trying to accomplish. And my accomplishment was, still keep a reasonable amount of margin. I don't want to be raising my margin too much. Be able to have something that I can take instead of on a monthly basis, I can do on a weekly basis. So I'm basically getting, it's almost like 4.5 years worth of trades in 1 year. So if I can do 3 to 5% on a monthly basis and make that a weekly basis, it's like trading for 4 years. And I can grow my account a lot quicker. And then I wanted to start compounding on that as well. So the butterflies were really, or the broken wing butterflies were really much more suited to that style of trading. And so I've kind of gravitated towards that now. And one thing that you notice when you trade butterflies or broken wing butterflies is that it takes a while for the T+0 line to start, um, start becoming
Start
more
giving
of
you
the
profit.
starting to
Yeah.
bring profit and start becoming more of the shape of the expiration, right? So it's kind of got pros and cons. You want that nice flat T+0 line because you don't want to, like, if the market moves, you don't want to be losing a bunch of money, right? You want to be able to do something, but you also want to be able to make theta. And so you kind of have that little window of when can I still have a flat line, but make quick theta without all of a sudden having too much gamma risk. And so that's kind of how that trade developed. And it's doing really well. I just closed a couple trades recently. And I don't know if you want me to show the service that I'm doing,
Oh,
the 14 service, or you can go to
oh, you
your,
can too. Just whatever you
yeah,
want to share is fine.
well, you go ahead and do it. Go ahead and share your screen since you're already there. And I've got all sorts
Oh,
of other
okay.
on here.
So if you go to airmer.com/Amy, it's got all of Amy's services and workshops and stuff. All the good stuff. Reset that to
Yeah, so you
100%.
can see that nice
There we
flat.
go.
I like that. So where are we?
Oh
The
yeah, yeah.
14
There's
alerts.
your butterfly graph. Yep.
Yeah, so you got a flat, so I like to have that flat line. So it's all about like trying to figure out what am I trying to accomplish and what's going to be the best strategy to accomplish that goal. So, but the fun thing about trading is that you're always, um, you always have to change a little bit. You don't have to change, like the nested iron condor still works today, right? So you want to do, or at least for me personally, I want to do something that's going to achieve my goals or be able to, has the capability of achieving the goals that I'm looking for, which may change, right? And also that suits my lifestyle. So that's kind of how I'm always evolving and coming up with different things and evolving it for the markets that we have as well. And there goes my other little thing. But if you want to show the A14 results so far, like maybe in the,
Oh
uh,
yeah, I can go to the members area.
yeah, go into the history. I like the one that shows the history, like under the My Stuff. Yeah, that one shows it best, I think.
Trade history.
Yeah. So as you can see
There we
here,
go.
yeah, it's doing pretty good. And this is not compounding. So I'm not doing any compounding with this as far as like I'm not increasing my um, uh, trade size at all in this service. So without compounding, I think I started this literally the very last day of July last year. So
Yeah,
basically
it's like
all
July 28th, I think.
right. So it's been what, 8.5 months? And the account,
Yeah, yep.
yeah, so we're up about 61% in 8.5 months and without compounding. And I'm pretty conservative because it's a class and I'm trying to teach, and I'm also trying to teach some of my nuanced stuff. So sometimes I'll do something that, maybe is a little bit, more adjustments than I would normally like to take. But I'm trying to, teach different ways of doing things. So, but it's been pretty successful. I think if you scroll up a little bit and look at the latest Yeah, so we just had a
There's
couple,
the trades.
yeah, so we just, every once in a while there's a loss sprinkled in there. But they're, pretty well contained. Um,
Yeah, I
and
mean, if you look at like the profit factor, let's see, where is it? 2.7. That's really good.
okay, yeah, so it's doing really well and it's a fun trade and people like to trade weekly. Of course, I just did the workshop on the A22, I'm sorry, the AIC
Yeah, I
22, the
see.
new updated version of the AIC. And so that's a little bit more, it's a little more complicated, but it's a lot of people were asking me about, hey, what about something a little longer term that I can do with a weekly trade? And I can do it either, I can do it in the SPX, I can do it in the RUT, I could do it somewhere else. Um, and I thought, let me revisit my AIC and update it for today's markets. And I think the nice thing about that, like I mentioned, is that you don't have as much upside risk. And as a matter of fact, I have a version where you don't have any upside risk, um, unless you have, downside adjustments, and you have to kind of tweak that. But it's got that flat line. And if you have a crash, a market crash, you can set it up for a profit in a market crash, which is not common for a lot of trades. So unless you're doing something directional. So for a non-directional trade to be able to turn it into something that profits in a crash is, something that's sought after as well. So that was a fun workshop that I just finished. So I don't know if I'm sure there's people in here that have joined that. So, and have part of my A14 as well. But yeah, so that's a little bit about the progression of from the beginning to where we're at now, I guess.
Well, and I don't know if people know this about you, but you're in competitive agility training with your dog. And
Yeah,
that's one of the factors you have on your trade type of selection, like how much screen time do I have to have for my trading? Because I have to do other things with your dogs, and life gets in the way too. But how long
exactly.
have you how long have you been doing the agility stuff?
I got into it when I got my first dog. My very first dog I ever had. He was born in 2009. He passed away a couple years ago, unfortunately. But he, I remember it was a breed that I'd never heard of. A friend of mine kind of pointed me in the direction of, you're going to get a dog. You've never had a dog before. You don't know what you're doing. And she gave me a book, and I found this breed, and and she kind of helped me, determine like what would be best because I'm very active. I was active back then too. I was married back then. We skied a lot. We did a lot of activities. Wanted to make sure my friend was, said, you've never had a dog. If you're going to get a dog, it's a lot of work and it has to fit into your family, into your lifestyle of what you guys are doing. So that's how I chose this Nova Scotia duck tolling retriever. Maybe you can bring one up on the web. And it's a type of retriever. They're smaller than Goldens. They're kind of like I'd say kind of like a border collie smarts with a bit of an off switch. Um, and there you go. And
Beautiful, beautiful dog.
yeah, they're beautiful. That dog looks very similar to the one I have now, Riptide. And so Jackson, I promised the breeder because it wasn't a very, there's not a lot of people that know about the breed. So I had to go to a breeder, and most of the people that they look for are not necessarily pet people. They want people that are going to do something with the dog, like they're going to take them hunting or do put them in the show ring or do some kind of dog sport or something with them. So I had to promise her I would do something, and agility turned out to be something that I found here that was fun, and the people were really fun. So I kind of got into it that way. And Jackson was amazing. He was just an amazing agility dog, and it was just super fun. And so now I have my second dog, Riptide, and I do agility with him as well. He's a little more distractible, but he's pretty good. He's pretty skilled as well. So it's just a fun hobby, and like you said, it keeps me busy. I live in Southern California as well, so it's most of the time it's beautiful here, and I like to play. I like to be outside. I like to go for walks and hikes and ride my bike and go to the beach, and that's another part of why I don't really want to sit in front of my screen, even though the one good thing is, the markets are open here at 6:30 in the morning. It's early, but I can finish my day pretty early as well. So I try to do that. I try to spend a lot of time outside, not sitting in front of a screen, and I don't have to worry about, snowing or weather outside to where I'm stuck inside. So that's part of why I choose those types of strategies and the way I trade them is because of that as well.
So if you had to give somebody advice, if they were just starting out, what would you tell them?
I would tell them to a few things. You know, try to learn as much as possible from people that are really trading. Don't try to do like a get rich quick scheme kind of thing. That's just not realistic. Yeah, that it could happen, but it's, very rare. And most of the time, people that get involved in something like trading, whatever it is, day trading or options trading or whatever, and they make a lot of money really quick. Um, Whatever it is that you were doing is probably the market's going to change. And you're going to find out pretty quickly that that really doesn't work. So I would say, try to learn as much as possible from people that actually trade, like here at Aramir. We have a lot of great experts here at Aramir. Um, try to do things that you feel comfortable with, that's more that's going to suit your lifestyle. So you're not kind of forcing it. And trade small or trade like start paper trading. Don't necessarily jump right in with all your money. And when you do advance from paper trading into live trading, start small. There's nothing wrong with, just trying one contract and getting the feel of it. Because it's really, I think one of the things that makes for a good trader is really getting a hold of your emotions. And that's one of the hardest things to do, especially when you're new. Because when real money is on the line, you'll make most of the mistakes that kind of happen because of your emotions are driving the decisions as opposed to really getting a feel for how like if you're doing a broken wing butterfly, like how does it react in certain markets? You're not going to know that. You're going to learn that from people like me and Tom and stuff, but you're not going to really know it and feel it until you're in there. And so that's why I suggest like paper trading, maybe get a back trader so you can see what might have happened in a certain situation. And then maybe graduate to trading like one contract, very, very small, so you can get that, get the emotion side into it and kind of get that out. And then always have a plan, a trading plan. So it's not just about getting into the trade, it's about how you manage it. So that's also super important.
I remember when I started with option trading with Dan, I was paper trading too long, and it took me longer than I should have to actually put a live trade on. So you don't really get the emotions and that you have with a live account when you're back testing. So
Yeah.
back test for sure, but don't wait too long to actually put a one contract trade on. And like you said, keep it small.
Exactly, exactly. Because once you tackle the emotional part, and I remember the day that that happened to me, that switch happened. Because, I was new at one time too. And I, traded a lot and I was learning and, your emotions make you make stupid mistakes sometimes. And I did a lot of stupid mistakes in the beginning. But I do remember the day that I realized that my emotions were, I mean, every once in a while I'll get something, but when I realized that my emotions were not playing at all a factor was in 2010, when I think it was May of 2010, there was some fat finger, what did they call it? The fat finger or something, like somebody typed something on a
Was
keyboard
that the
somewhere
flash crash?
and it was a flash crash. And I remember I was sitting in my kitchen and I had my computer on and I had a trade on and that happened. And I'm like, what's going on? The market's taken. There's a war breakout or whatever. I turned on the news and nobody knew it was really happening. And then we kind of determined it was this, eventually they determined it was this fat fingered flash crash thing or something, caused it. And I just remember just like being so calm about it. Like, all right, well, my position I think it went out of or what was going towards this one side of my tent of the position. It wasn't looking great. I was doing iron condors at the time. And the market makers were, making the bid and the ask so wide that you couldn't do anything anyway. So there, why panic? There's nothing you can do. As a matter of fact, I think at one point it showed that I was up like $1 million or something. It's like it's totally erroneous
Well,
data.
I'd be calm too then.
Yeah, I'd be like, yeah, exactly. But I mean, it was unreal. It was like I knew that as soon as things settled, it would be down, a certain percentage, and which it was, right? But it just took a little while. But I just remember looking at the screen, just totally calm and thinking, okay, well, I'm gonna have to wait for this to settle and then see what I'm gonna do. And that's it. And that was when I realized that I finally got past that emotional part of trading. But it took me, 5 years, I think, 4 or 5 years before that happened. So yeah.
Yeah. All right. Well, I don't see any questions for you, Amy. So, any last things you want to say before we wrap it up?
No, no, just really thanks for having me on and really enjoy teaching, and I really enjoy being the part of the Aramir community, and I hope to see some of you in my class, one of my classes.
Yeah, and I guess you have some ideas for changing your alert service, kind of
Yeah, I'm going to
percolating.
send out a poll. I will bug you about that later, about sending out a poll to try to include more things, but doing it in a different way, a little more, you know, I don't know. It depends on what people come back with their answers on the poll, I guess, is how I'm going to do it.
Oh, and Lewis asked, is it possible for those of us that have taken the A14 and AIC to give a try the alert service for a couple of weeks, like a trial?
That's part
Oh,
of the poll thing I'm going to do. I'm going to try to come up with something. So
okay, well, there's a poll question for you. So,
yeah, yeah, I have a couple things that I want to kind of gear it towards, and so we'll see. Yeah,
all
but
right.
thanks
Well,
for listening.
thanks, Amy. Again, it's been a pleasure working with you all these years, and I'm sure lots of people are learning lots of good things. So keep up the good work, and thanks everyone for coming.
Yeah, thank you. Thanks, Tom.
All right,
Same.
we'll see you, everyone.